Well, let's talk about the people who have already made that transition and have decided to do it. We serve a lot of oil and gas producers, and hedge accounting has really not been popular in that group. But then we also have a number of, let's just broadly call them manufacturers, and we see that hedge accounting is a lot more popular. What trends do you see? Do you see hedge accounting, increasing in popularity? Do you see certain hotspots of certain industries?
We do. We think it's on the rise. We just think by the very nature of what we've encountered over the last couple of years, when we start talking about the volatility in market prices, the competitiveness of the markets themselves. When we start talking about, really trying to align better with your risk management strategy. All of those elements are coming into play as far as to make it more conducive to a hedge accounting type of approach. When you talk about the industries, energy has been a little bit sort of slow to the party. They shied away from it many years ago, and we have seen some that have started to come back, but a lot of them are still hesitant to do it. We tend to see it much more in related to the fixed income side and the FX side. And then we do see it a lot on various types of commodity-based manufacturing concerns. So the manufacturers are a big one because, the lead times and what they're doing as far as in buying various types of materials and what have you, those lead times lend themselves very well into this type of approach. So the auto manufacturers, the airlines, which is a big one. You see, we do a decent amount of work with various airlines. But you see it in those types of industries more often than not. And they seem to have adopted these types of approaches, and they seem to be comfortable with them. And it's worked well for them because of the nature of the business and what they're trying to achieve.
It's been surprising to me that more airlines don't hedge. I mean, if you think about the nature of their exposures, where they're pre-selling tickets at a fixed price, knowing that they're going to have a certain amount of jet that they're going to consume, and why they don't hedge that up front, I do not understand. For the more speculative part of that consumption, I don't mean speculation in terms of like market trading, but in terms of like trying to figure out how many seats you're going to sell.
Uh-huh.
I can understand not hedging that, but the ones that you've already sold,
Right.
I mean, then you're matching a fixed revenue against a variable expense, and that doesn't seem to be the best economic situation.
Well, a simple example of that would be some of the airlines that did hedge a while back and really did extremely well as a result of the fact of their hedging programs. So it did give them an advantage as a result of the fact that they were hedged. They were able to operate more freely. And you saw that being rewarded in the investor confidence with the stock prices that were moving up as a result. So I mean that translates all into dollars on the tail end, and the confidence that your investors have and how the markets perceive it, that you're really managing your business the way you should be managing it. That's really what a lot of this is driving. Are you doing the prudent things? Are you addressing it properly? And if so, your bankers, your investors, all of those are going to look at it positively.
We also have an environmental practice or emissions practice where we're trading products that are just now becoming having reliable marks.
Uh-huh.
They're starting to mature.
Yes.
And so you're even starting to see swaps on new things like emissions credits or renewable credits or a variety. Swaps on RINs and
Right.
swaps on California LCFS. And we're seeing a lot of interest in this, especially with renewable fuels producers.
Yep.
Any special things going on there in that market? Seems like it's happening fast.
That's the area that everyone is sort of looking at now. I mean, you date back 3-4 years, people were looking at crypto and all the other types of emerging markets. That is sort of it's grown to the point that it's 5 years ago I don't remember ever seeing any crypto deals. Now we started seeing them probably 2 years ago, 3 years ago. The clients were starting to enter into these types of transactions, which means there was more available information. You could go out and get pricing on them. You had counterparties that were willing to do these types of deals. But the area that you're referring to, which is a little bit more on the the ESG side that we're all sort of paying attention to now, carbon credits, different types of, like you mentioned, RINs, all these various types of instruments that have come about over the last 6, 7, 8 years, where before they were out there, but they really weren't being traded as much. Now you're seeing them in the secondary markets. You're seeing people actually writing deals on them. So they're becoming much more mainstream. And the accounting is actually, that area is going to be reflected in the near future. That's where we think is going to be the next area to address a lot of hedge accounting, because it's a necessary element. Before, it used to shy away from it because it was, a very simple example would be, weather derivatives. When you look at the accounting guidance, weather derivatives is considered based on a geological event. So they would sort of push that aside and say, well, that's really not subject to hedge accounting. It's not subject to any of the accounting guidance. Where I think what we're going to start seeing is those types of instruments are going to be a little bit more mainstream, and as a result, the regulators are going to have to come around to acknowledging how they really treat those, for how those instruments are being used. And but I do think that's in the near future.